Hello all, Preeti here. I am a company secretary by profession. While preparing for my CMA inter, I felt it would have been useful if audio notes were available. In this context, I decided to give it a try myself. Today, we are going to start with Section 42, Private Placement of Securities. Point 1. Private placement of securities means a specific offer of securities made to identified persons to subscribe the securities of company. Second point, the persons to whom private placement shall be made are identified by the board of directors and approved by the shareholders by passing a special resolution in general meeting. Third point, private placement offer shall be made to identified persons in Form PAS 4 and the details of those identified person shall be maintained in register in Form PAS 5. Point 4. Maximum number of persons to whom such private placement offer can be made in a financial year cannot exceed 50 or such higher number of persons as may be prescribed by the rules. Rules prescribe 200 persons. Therefore, the current limit is 200 persons. In the above 200 persons, QIBs, that is qualified institutional buyers like mutual fund, bank, insurance company, PFI, venture capitalist, etc., and employees are not counted. If offer is made beyond 200 persons in a financial year, it is deemed to be a public issue. The next point is, no cash is allowed in case of private placement. That is, proceeds must be received only through banking channels. The next one, no advertisement of private placement is allowed. And no renunciation is allowed. No new private placement is allowed unless earlier private placement is done or abandoned. The 11th point is, allotment should be done within 16 days of receipt of application money, else it should be refunded within next 15 days, failing of which interest at the rate of 12% per annum has to be paid from the expiry of the 60th day. The 12th point, company cannot use the proceeds of private placement and shall be kept in a separate scheduled bank account, which is known as escrow account, until and unless allotment is made and return of allotment is submitted to ROC. However, nothing shall prevent a company from using the above money for A. refund and B. adjustment towards allotment. 13th point, company shall submit return of allotment in Form PAS 3 within 15 days of allotment containing details of allottees, securities issued, amount received, etc. Penalty for not submitting Form PAS 3, that is, every promoter and director and company is liable to pay penalty of 1000 rupees per day but subject to a maximum of 25 lakhs. 14th point and the last point is contravention. That is, in case of company, promoter, director shall be liable for a penalty of, that is, either of whichever is lower, amount received by private placement or 2 crore rupees. And the second bucket says company shall be liable to refund the entire amount of private placement within 30 days of penalties order together with interest at the rate of 12% per annum from the expiry of the 60th day of receipt of application money.